Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I would like to speak about the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. And as usual, I will try to keep the video as educational as possible. Now, starting here from the monthly time frame, what we can see is that we have a market which is currently testing and rejecting a quite significant level of structure. In fact, from here, all this previous rejection to the downside was created, then the market broke above that zone, and at that point, as we know in the market, previous resistance, once it gets broken to the upside, becomes support. And the market, in fact, went and tested that previous resistance turned support and started rejecting it to the upside. In a situation like this, we could expect more potential bullish development to be created away from this area. We can also notice that this was not only previous resistance turned support, but was actually confluence of support. In fact, if we take our Fibonacci from the low to the high of this impulse leg, which is what you have to do if you want to measure a correction, we can see how we had a perfect 50% retracement lining up exactly with that previous resistance turned support, creating confluence of support instead of the level that in fact we could expect this market to test and reject to the upside, which is exactly what the market is currently doing. So in a situation like this, we could expect more bullish price action to be developed, essentially with the first target to the upside being this previous high from which all this move to the downside was created. There is definitely room for more bullish price action for the market to go and test this very strong previous resistance from which all this move to the downside was created. So at least in the short term, bullish price action could be expected. Going down on the weekly time frame, what do we have? Now, from a weekly standpoint, we must notice how the market is currently testing previous weekly resistance turned support. In fact, during all this move to the upside, there is one candle not related to the move, which is exactly this red candle here, meaning that at this level, the market found resistance, making this rejection to the downside and printing this red candle. After that, the market created this green candle, which made this previous resistance become support. And at the moment, the market is testing and rejecting this previous weekly resistance turned support from which bullish price action could be expected. Going down on the daily time frame, what do we see now from a daily standpoint? First of all, I did speak about USDJPY quite a few times in the past. In fact, I spoke about it when the market was here and I explained all the reasons for which we could expect this move to the upside, and that is exactly what the market gave us. Then from here, I made another breakdown explaining all the reasons for which we could expect this correction, and then from here the continuation to the upside, which again is exactly what the market gave us. Then we had this correction from here. I made another breakdown explaining all the reasons for which we could expect this move higher. Then we had the creation of this M pattern. From here, I made another breakdown explaining all the reasons for which we could expect a potential move to the upside, which is what the market gave us. So by the way, all these previous analysis, I will link them down below in description, so you can go and check them out for more free education. But in general, this market lately has been moving in a quite predictable way, meaning that all the patterns that usually the market likes to create and complete have been playing out as you would normally want the market to complete them. Now, at the moment, if we have to look at the most recent price action, what we must notice is that at the moment the market is testing exactly the previous high From here, these two rejections to the downside were created. At the moment, the market is testing exactly the same zone. Now, if you remember, when we were looking at the monthly, we identified the fact that more bullish price action could be expected. However, until we will remain below daily resistance, this market can easily continue lower. So in order to have all the time frames aligned to the same direction, we need to see a break above resistance. Only if we get a break above resistance after the break on the retest of the previous resistance turn support, that is where essentially we would have good probabilities for a potential rejection to the upside away from this area. So that is where we would have good probabilities to see more potential institutional longing inside of this area, which at that point in turn would further increase the probabilities of a potential rejection to the upside. Now, if we go and see what is going on, if we look at the commitment of traders, so what institutions are doing in the market, which is the COT data, and we look at the data precisely for the JPY, we can see how with the last reports, net positions have been decreasing quite a bit. We went from minus 77.7k net positions all the way down to minus 97.1k net positions. This shows how institutions have been moving to the bearish side of the JPY, making USDJPY stronger. So essentially means that since institutions are shorting the JPY and all currencies on the spot are traded against the USD, they are actually longing USDJPY, which in fact has been trending higher lately, fueled by the longing that is going on from an institutional perspective. So to recap here on the daily time frame, until the market will remain below this resistance, it could easily continue lower. However, if we get a break above the resistance after the break on the retest of the previous resistance turn support, this is where we have good probabilities for a potential rejection to the upside away from the area. So if we get the break on the retest of this previous resistance turn support, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frame combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and price goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So I really suggest you go and check it out as soon as possible. The link is also in the description at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.